You are listening to ChartingWealth.com for Wednesday, the 4th of November. Can't believe it's already November 2015. And we jump right into the markets. We always start with our two-day chart, and we start with IYY, which is an ETF, an exchange-traded fund, that mimics the entire market. It's by iShares, the Dow Jones U.S. Total Market Index Fund. So what do we see? Well, we see a strong uptrend continuing for the market over the course of the day. The total market was up 0.2%, so that's 0.2%. We continue to see strong upward movement. We have open green boxes in the Heikin Ashi type of candlesticks that we watch price movement with. We also have a nice long rise in the MACD, the moving average convergence divergence, when it rotated over, going up back on the 5th of October. It's continued to move up strongly. So how high will it go? We don't know, but we do know that pre-election years, the market tends to move up strongly across the board. The Dow Jones Industrials, the S&P 500, and the NASDAQ, and we are seeing strong upward movement in a pre-election year. Now let's go to the 4-hour chart and look at our intraday. The 4-hour chart is basically the half-day chart, and it tells us what went on. We can see the market moved up in the morning and in the afternoon, crossed over in the morning going up on the 4-hour chart, continued up movement way above the 2-day trend line. That's the total market. Now let's take a quick look at the S&P 500. What do we see? Well, it's continued to shoot up also. That exchange traded fund is SPY. That's what we track, and we can see derivative oscillators strong, and the MACD is strong in its divergence from the red signal line. We continue to see big green boxes moving up as far as our price movement on our candles. If we look intraday on the 4-hour chart, what do we see happening in the morning? Well, again, big strong movement, crossover in the morning on the MACD, moving up on the short chart. Strong upward movement in the afternoon, again above the 2-day trend line. SPY was up almost 1/3 of a percent, 0.29% for the day. Now, lastly, as far as our indexes go, let us look at the Qs, the cubes, the QQQ. What is that? That's the NASDAQ 100. It also has been on a strong upward trend since the 5th of October. Hopefully you have been writing that up in your virtual trades. Now we do see a little bit of a changeover. It didn't stay on as strong a track in its up movement. We're going to have to adjust our 2-day trend line a little bit. That is, draw it back to a lower level. And we'll continue to watch that. Not always good when you see that. You'd like to see it keep hitting higher highs, but it did not do that. We do see derivative oscillators still strong, as is the MACD. Again, open green boxes moving up above the 2-day trend line. In its closing, we did redraw that. So now let's drop back to our 4-hour chart, see what happened intraday. We can see that it's really interesting. The Qs is still crossed over going down on the MACD, on the short chart. So those gains that are going on, we can see derivative oscillator did flip over in the afternoon to green. It had been red the day and a half prior, but we still have it in the negative on the derivative oscillator, on the MACD. It's not crossed over yet in the moving average convergence divergence. Still above the 2-day trend line, but we are seeing some slackening in the rise. So just continue to watch. That's just the short chart. The big chart's still up for the day. The Qs was up 0.35%, but it's just a little interesting how off it is. So continue to watch that. Just a little strange. Anyway, now let's go from there back to our 2-day chart. What do we see on gold? Well, gold continues to accelerate down. We even have to redraw our 2-day trend line because it has accelerated down massively, gold has. And we continue to see gold moving down. Now, of course, we look at the 2-day chart just because it's a good idea to see what the bigger chart's doing. But what do we use for trading, our virtual trades in gold? Well, it is prescient. Our 2-day chart, I'm sorry, our 4-hour chart, as far as telling us where the trades are in gold. We can see that when it crossed over going down on the 19th, it has been a good chart to us as gold has continued to rocket down. If you were in an inverse virtual trade. Now, again, we use the word virtual trade all the time because we're not a stock calling service. We're an education company. We have nothing to do with telling you what to trade ever. We do encourage you to virtually trade, virtually invest. What does that mean? Well, you can go to any of the online brokerage houses. You can sign up for a virtual account. I'm not aware of one that doesn't allow you to do that. You don't have to put any money in. And you can start practicing trading, practicing investing, and that's what we encourage you to do. And when we start talking about learning, you can email us, and that's cw@chartingwealth.com. All you got to do is email us and say, hey, I want your 15-minute stock charting training, whatever. Just say, look, I want the training for your how to read a stock chart. We'll get it to you. It's 15 minutes. We'll send you a link. Watch that, listen to it. Then you can start following us every day, and you'll know what these crossovers are in the MACD. You'll understand better what the derivative oscillator is, what the MACD is, what the signal line is, what these boxes are that represent price movement and candlesticks. You'll understand what the Bollinger Bands are, volatility bands. You'll understand what an index is, and you'll have a good idea as to the things that we're talking about so that you can start practicing. And it's not practice that makes perfect. What is it? It's perfect practice that makes perfect. And we want to practice a lot before you start making your own decisions. We don't ever tell you what to do. We're just all about practicing your trading and your investing till you get good enough and you can make your own calls. But if you were doing any of the virtual trades when it came to the inverse in gold, they're funds that track the opposite of gold's movement. Those are called inverse funds. If you'd gotten into one of those around the 19th of October, you would be doing quite well. The high, well, let's see, the low then was 111.94. Where was gold today? 107.11. I mean, come on, that is some nice movement. In an inverse fund, you would have made the opposite of what it went down. It would have gone up. And sometimes they're double inverses. And again, you can learn more about that. We're just about making sure that when you do your investing, your virtual trading investing, that you're making sound decisions based upon what the charts are telling you. Also, you can email us again, cw@chartingwealth.com. Not only ask for our video on how to read a stock chart, you can also ask for our layout. So you can get this layout, and it's the same one that we use for our indexes to be able to see exactly how the stock charts are set up, how we use them. It's already preset. From freestockcharts.com, it's simply our settings. So let us know. We'll be happy to also share that with you, our layout. That's where the markets have ended. Gold down, the other charts, the index is up. And again, don't forget pre-election years, which is what we're in right now. And again, I recommend all the time to anybody who's willing to listen, you need the Stock Trader's Almanac. It is published every year. Yale and his son Jeff Hirsch are the ones responsible for it. What a great resource it is. On page 102, you can read about fourth quarter market magic. I really encourage you to read that. You can also see just what kind of years we typically have in pre-election years. For example, pre-election years for the S&P 500 from 1949 until March of 2014 up on the S&P 500 17.1%, rocketing past any other years. So what are we seeing in the S&P 500? Well, we're seeing a lot of gains over the course of the year. So again, pay attention. Pay attention to what's going on in the market. You know, we have had the market up to a higher high, then we had it drop way off, and now we have it gaining back up. Will it make even higher highs for the year? Well, pay attention and let's see. But remember what historically it has done. So it is important to read the charts on a daily basis. As we say over and over again, listen to the charts, not the media noise. We love to hear from you. Follow us on Facebook and Twitter. Please also check us out on Instagram and let us hear from you. cw@chartingwealth.com. We're happy to share our knowledge with you, and we love to hear your feedback. Thanks so much. From chartingwealth.com.